Hey, what's up everybody? It's Jonathan in Austin. So today we're shooting a quick video on homestead exemption and why that's so important with property taxes and why if you're applying for it, you need to be in that house and closed before January 1st. And so the thing with homestead exemption that we want you to remember we're going to talk about today is 20% and 10%. So if you remember those two things, you will always remember homestead exemption. So Austin, kick it off. Let's talk about it.
So homestead, a lot of our clients are confused as to, especially first-time home buyers, what the homestead exemption actually is. What it is it's on your property taxes. It's not for your personal taxes or your business taxes. It's property taxes. It's your homestead exemption. And on your property taxes, what it's going to do is it's going to give you a 20% discount on the tax rate. So your county is going to assess what we call the taxable value of the home. This might be different than what you bought the house for and what the house is appraised for on a market standpoint. The taxable value, let's just say for this scenario that your home has a tax value of $500,000 and your tax rate is 2.75. It varies all over the place. So your tax rate might be whatever it is somewhere else, but let's just say it's 2.75. If this is you, you're looking at a tax bill of $13,750, which isn't cheap. But the homestead exemption, what it does is it basically knocks your rate down from 2.75 to effectively 2.2. It's not really what it's doing. It's giving you a 20% discount in addition to your rate. So, but effectively, essentially it takes it from 2.75 to 2.2, which knocks your bill down to $11,000, and that's huge savings. We're talking over $200 a month savings for you if you're escrowed, over almost $3,000 difference on the year if you're not escrowed. So big savings.
Yeah, so it's a great thing that our county, our government allows us to have these homestead exemptions, and so that's the 20% rule. Think 20% discount. Austin just nailed it. The next one we're going to talk about is the 10%. It's kind of a 10% protection, or a 10% cap would be a good way to think about it.
Yeah.
Is that if your house, the county says your house is worth $500, it only allows them to increase that value by 10%. So if your house was $500,000 in 2019, the most they could increase the tax value of your house is $550,000. So it doesn't mean they will, but it just means they can, and if they do, then they can't go past 10%. So if you don't have homestead, they could go up 15%. If you have homestead, maybe they only do it 5%, but 10% is the cap they can put on it. And if you remember, like Austin said, so it's a tax value multiplied by the tax rate is what gives us a tax bill. So you still have homestead, and you have this tax rate of 2.2, and so the tax bill with the 10% increase would be $12,100. So even though your value in your house went up and you got a larger bill, thankfully you have homestead and it stayed 2.2 and it's not 2.75, and thankfully it only went up 50 grand, 10%, and so now you're at 12,100, which is still way better than 13,750.
Yeah, it helps make your home more affordable for you on the short end and in the long run. And so getting the homestead exemption is huge, and getting it done by the end of the year is what it's going to take. So you got to close on that house the year prior to be able to claim that homestead exemption, and then once you claim it, it's there until you move and claim it somewhere else.
Yeah, it auto renews every year too.
Yeah. So if you've bought this year, make sure that you file for your homestead next year. If you're looking to buy right here at the end of the year, go ahead and buy so that you can claim your homestead next year.
Exactly. So just remember, 20%, 10%, and that's homestead in a nutshell.
Woo!
Adios.